The Fed is in no rush to cut rates, but President Trump disagrees. It's Thursday, 20th of March, and here's what you need to know. The Trump administration's tariff policies appear to have tilted the US economy towards lower growth, higher inflation and higher unemployment. That's according to policymakers at the Federal Reserve, who said yesterday they're in no hurry to cut rates. The market next expects them to cut in June, but it will depend on the impact of another raft of tariffs due to come in on April the 2nd that could hit potentially every import to the US. The president's not happy. He wrote on Truth Social, the Fed would be better off cutting rates. April the 2nd is Liberation Day in America. Our number of the day is 1.7%. That's the Fed's forecast for economic growth in the US by the end of the year, down from 2.1% just 3 months ago. Why? Well, it's the first time that policymakers have tried to calculate the impact of President Trump's tariffs, and they think those will push prices up. They're now predicting inflation will end the year at 2.7%, up from 2.5% forecast in December, and they also think those tariffs will push up unemployment. It's the turn later of the Bank of England, which still has the highest rates of any G7 central bank at 4.5% and isn't likely to cut them today either. The impact of those tariffs on Britain is factoring into policymakers' thinking, and so are potential major spending cuts due to be announced next week by Finance Minister Rachel Reeves. And our stock of the day is Nike. It's set to report its biggest fall in revenue in nearly 5 years later. The problem is that Americans just aren't spending money on things like sportswear. Nike's revenues are forecast to come in 11.5% lower, and its stock has already fallen 19% since new CEO Elliott Hill took over in September. And that's what you need to know this morning.